What happened to Reddit's killing of short sellers? What is the RBA's Dr. Phil up to? And is the CBA's dividends and share price heading in the right direction? Up, up, up. I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money. All right, Paul, GameStop was about $350 now is more like $90. Is the killing of short sellers over?
Well, it's even more than that. Actually, I think got briefed at about $480, Peter. But so we're down about 75%, 60% last night. Look, yeah, I mean, I think they'll come back, but I think this is the end of the line for some of these stocks. But there'll be other interest, and I think what it did show was that the little guy has got some firepower, collective firepower. There are stories that there may be more. This might be more big guy versus big guy, right? So it's going to take a long time to know exactly what's happened. I thought an interesting angle on this today was one of the lines coming out from some of the commentators that it may just actually be a bad thing for the market in the sense that the short sellers they picked on were actually quite transparent and actually were telling the market their positions. And so now, why is anyone in the US going to say what positions they've got? Because they just leave themselves liable for a bit of a ramp. Yeah. So it actually may be bad for transparency. I don't think we're going to see the same in Australia, Peter. I think this is one of those things that just happens in the US, but it does. The danger signs are there, and I guess probably a sign of a bit more volatility to come.
Would regulators in Australia go after, say, if a well-known character try to muster a whole bunch of people to attack a company to try and make money? Would our regulators go after that person?
I think they would. We have a thing called the Corporations Act. We have things called market manipulation, market rigging. They're offences under the Act. They actually carry penalties potentially criminal as well as civil. Maybe hard to prove, Peter, but look, it is an offence to rig the market, and you've got to say a little bit of what happened there. Not the short selling, because that is legal, but at least in trying to, if it was through the chat rooms and a whole lot of retail investors encouraging others to buy and let's take it up, that was market rigging and not healthy for markets.
Would short selling be challenged in the not too distant future?
Yeah, short sellers are going to be a little more careful. I mean, I think they're going to have to be not as public, which is a bad thing. I think they're also going to be just a bit afraid. We saw a little bit, you could argue that a bit of reaction internationally, things like Unibail Rodamco and a couple other stocks where there's a bit of short selling. There was a bit of a squeeze initially.
That's the old Westfield business.
That's the old Westfield. I think they're just going to have to be a bit more careful. And one of the things that happened in the US was that GameStop was something like 120% short sold. That means for every 100 million of shares, there was 120 million shares that are short sold. We never get to those levels in Australia. That was too much, and I think that's where the regulators got to get a bit harder.
Okay, let's go to Dr. Phil now, and he's basically promising more and more and more money for everyone.
Dr. Phil wants to run printing presses, right? That's what the RBA is doing. Not satisfied with the first $100 billion. Let's get that down, $100 billion of quantitative easing. We've now got another $100 billion to come where they'll be just buying bonds. In fact, they'll be buying a net $1.5 billion bonds a week. That's, in other words, the government keeps pumping them out to fund the stimulus payments. Yeah. The Reserve Bank is actually buying more back.
Yeah. And as they buy, the money gets into the system.
Yeah.
And keeps interest rates really low.
Keeps interest rates really low, keeps the pressure on the Aussie dollar. So that's probably one of the reasons why the Aussie dollar's come off a little bit. I mean, I don't know what else Dr. Phil can do, but I question whether he actually does need to do much at all, Peter.
Yeah.
But
it seems like a very big insurance policy he's taking out to make sure that when JobKeeper disappears in March, the economy is going to have a lot of money, a lot of demand to offset it.
Well, as we were discussing a bit off camera, I mean, it wasn't so long ago, 3 or 4 years ago, we were all wondering about how, central banks would ever be able to taper these programs. Yeah. Now we've gone way past that. Absolutely, we are so far past those concerns. But at some stage, markets are going to worry about this stuff. Now, that might be 12, 18 months, 2, 3 years down the track, Peter, but this is unheard of support by the central banks. And, just interest rates, he's saying now till 2024. Gosh.
Unbelievable.
And I guess, for equity markets, that just keeps support for the rally because where else can you invest?
Yeah, and a central bank promise today doesn't mean much in 2 years' time if inflation.
I think they've shown themselves pretty flexible and pretty nimble, and things change, So look, I know what Dr. Phil says. He's a great man, but Look, I just don't know whether this was needed, but that's what it is. The market likes it, and that's all more bull factors for the equities market in the short term.
Okay, let's go to a bull story. CBA's dividend, you reckon it's on the way up, and the share price could be helped by a buyback.
Well, I think reporting season is really important for a couple of reasons, but I think the retailers are going to do super well. Stocks like Wesfarmers, Woolworths, I think you're going to surprise. JB Hi-Fi already know. I think there's just been so much money. So anything with the consumer in front of it, in other words, not something impacted where like travel, because consumers can't spend, but where they can spend are going to be the surprise winners. Banks are going to do better. We've got Commonwealth Bank, Bendigo, and a couple of the other big financial institutions reporting. Big thing for the Commonwealth Bank and why I think the share price is going up is the dividend's going to be higher than expected. I'm tipping at 160 cents. The market's very divided on this, Peter, somewhere between 100 and 160 cents. But the big one here is whether they're going to do an off-market share buyback. And I think that's behind the rally. There certainly will be a return of capital sometime this year from CBA. Whether they're a bit more conservative and say, let's do it in August, we actually get to see how the crisis has really panned out. I don't know. But they have too much capital and it's going to come back to shareholders. They're sitting on a swag of franking credits. This is the most best thing by their shareholders. And I get the sense the market is starting to pencil in maybe one being announced next Wednesday.
Yeah, and we were talking up CBA around 60 and it's now 86.59. Can it go much higher than that, Paul?
Well, look, I mean, in an off-market buyback, it can because, it's a fantastic deal. I mean, it is the best-run bank and it has performing well. Analysts think it should be in the 70s. This is the one they don't like, but the analysts have been so wrong on the Commonwealth Bank.
But will they pull the other banks along with them, Paul?
They are going to pull the other banks along with them. And so this is really important because they'll set the tone. Whatever Commonwealth Bank does, NAB and Westpac will eventually follow suit in May. Commonwealth Bank gets stingy on his dividend here and says, look, we're not really sure how this crisis is going to pan out. We just need to be more conservative. That'll mean give the license to the others. So it's really important for the market in terms of what CommBank does next Wednesday.
Okay, with Matt Comyn, the CEO of CBA, is stingy. You can blame Paul Rickard. He was his mentor. I'm Peter Spitzer.
I'm Paul Rickard, and we're mad about money.